We've seen a rebound, good morning, in equities this week. Does it change your view at all on risk assets?
No, it confirms our view on risk assets, which is that we're in an environment that is characterized by very strong growth, not just of the global economy, but also of corporate earnings. We've had really a bumper season in terms of earnings reports and forecasts from analysts and corporates. So that's very supportive of all risk assets and particularly equities. So clearly we had a bit of a technical correction earlier in the month, but we're now back on track for, you know, this remains a very good environment for equities.
Yeah, and the fact that we've seen equities gain despite that US CPI print that we had out earlier in the week, what does that tell you about investors' view of equities for the rest of the year?
Well, I think it's telling us that for now markets are seeing an environment where growth is higher and inflation is also higher, but higher in a healthy way, a way which indicates we're getting back to full capacity, not right now any threat of overshooting that would cause the Fed to have to really step on the brakes. So it remains a very supportive environment, probably not as much as last year, but still a very constructive environment.
To get you ready for the weekend, folks, we go into a long weekend in the United States. I know that's not the case, Isabelle, over in London, where Monday beckons far too soon. But into the reading of the weekend, the immovable force is the elegance of dollar weakness. Let's bring up the technical chart of BBDXY, and this is a spectacularly gorgeous chart. I'm not going to mark on it. I'm just going to zoom into where we are, and I think you can see very easy. I'll get this out for Radio London out on Twitter here in a bit, how elegant this collapse in the dollar is. Isabelle, what does that signal to portfolio managers that their 2018 reality is a persistent, elegant decline in the dollar?
Yes, I mean, look, I think it's very important to not lose sight of where you start from. If you start from you know, January 1st of this year, obviously dollar is lower. If you start from 6 months ago, dollar is lower. But you know, the important thing here is the longer cycle. The U.S. economy for years was performing well ahead of all the others. The dollar was quite a lot stronger, and now you know the others are recovering. There's good news about Europe. There's good news about Japan. There's good news about emerging markets. Better than they've been in years, and so assets are reallocating to all these other economies, and that's pushing their currencies up and pushing the dollar down. That's a rebalancing phenomenon. I think it's a little misleading to just start from the last few months where indeed the dollar has been showing a steady decline.